we're a long ways from that. We just hit the official statistics say over 9%, right? And we're going to get into the difference between the official statistics and maybe what the underlying prices really are. But before we touch on that, the headline here is that Biden is still thinking about rolling back the Trump era tariffs on China. And
now, of course, you were sounding
help on inflation.
We were sounding this. We were sounding this alarm long before the Biden administration, and it was become popular. And right now, we mention that because there seems to be a debate in different political camps as to whether or not it would be worth it. But I think at the end of the day, like you mentioned, all hands on deck, whether it reduces inflation by a full point, a percentage of a point, that there's relief to be felt in the economy outside of the CPI, outside of the inflation index that is often not being measured, that can that could help a lot of people. So,
I mean, here's an example right here of a company that's based out of Indiana. They estimate that they've lost nearly $500,000 to these tariffs. That they could have used that money to hire engineers, grow their business, and that becomes those expenditures become income from for other people, and that they can spend that money on whatever they need, and you start to get this virtuous circle of expenditures. But so this is like a dead weight loss, if you want to use the economic terminology, just money that's wasted that could have been used to actually stimulate economic activity. But regardless of that, that's just a basic example. But when you scale that up across the economy, we're talking about a lot of money that just gets taxed right out of the economy, and it hits consumers especially hard because tariffs are very regressive. We've often see that they fall on the people who have the least, where consumption makes up the largest fraction of their budget, and so they're paying a higher amount of their budget to these tariffs. It's hitting the people who go to Walmart, who rely on these imports for their living standards. And so the debate is occurring in the Biden administration. You have one side saying, well, this is good because we have leverage on China for their intellectual property theft, and it supports domestic manufacturing. And then you have the other side saying, well, yeah, but it comes at the expense of all the people who are purchasing goods and who could benefit from lower prices, especially people who in a moment when inflation is super high. And so a lot of this is turning on the different camps and their different predictions or projections of how much it would actually reduce the CPI. And one of them, the camp that's more or less on the side of the domestic manufacturers, they're trying to say it's a very small impact. It would maybe at most 0.26% of a percentage of a point. So not even a third of a point off of inflation, of the CPI numbers. The other side saying it could be as high as a whole percentage point. That's Larry Summers.
But as you were mentioning before we talked about this, regardless of a point or a third of a point, there are factors outside of the index that aren't measured in inflation that could really benefit the economy.
That's right. Yeah. So to understand what that's about, the CPI is a number that's arrived at by kind of massaging the data and underweighting and even excluding some of the more volatile categories of expenditure, such as food and housing. These things get either minimized or excluded, right? And so the point is that just because the drop in tariffs might not pull a whole percentage point off of the CPI, it could still make a big difference for an individual, because the CPI, that basket, it's so heavily manipulated that it's not representative of what you might purchase on your normal day to Walmart, right? To get goods or services for your family. So yeah, it could have a very limited effect on the CPI because it excludes some of those more volatile things. The CPI understates inflation anyway, right? So but in terms of the real impact it has on somebody going to the grocery store or going to shop, to get some goods, it could be much greater than 1%. I mean, that would be that's way understating it. I mean, we have a quote here from an economist talking about just purely on automotive components and electronics, that you could be looking at a 5 to 10% reduction in prices, right?
And think about that for
that's
most
huge.
people, that the most of their expenditures are traveling, going to work, fixing their car, fuel, and food.
Yeah.
And so this would affect, you know, a lot of people for sure.
For sure.
Technology sector and automotive industry. Yeah.
So here's the part about the automotive.
5 to 10%. That's
yeah,
huge.
5 to 10%. This whole article is worth reading. There's some good economics in here in general. But one of the things we wanted to touch on before we left is that there's this old understanding about the arguments for tariffs in economic theory, and it kind of goes along like these lines. They tend to benefit a very small number of manufacturers and people who are employed in those industries, right? So because it shields those companies from international competition, they're able to sell their widgets at a little higher price because they're not facing competition from foreign manufacturers.
There's the
right?
tariff. The tariff says we're gonna make them pay an extra $1 on that widget, so your widget stays at 90 cents. And
now you can charge more, right? Yes.
Right.
So they clearly are going to be for that, right? And they're going to come up with all these different arguments about why the other nations manufacturers are competing unfairly, and they're dumping. There's all these terms about, you know, but it all comes back down to the idea that they don't want competition. They don't want prices to be set at the market level. They'd rather have a policy come in and make those other producers put them at a disadvantage so they can have market share. And so their interests are pretty clear. And the other interests are the consumers, the majority of people who aren't employed in that industry and who face higher prices because of this tariff. And so clearly they have every incentive not to have, you know, they don't want, it's not in their interest to have that. They'd rather get cheaper prices and have money left over for other things, right? To save or to invest or to pay down credit debt or whatever, right? Live better. And so there's this natural kind of an antagonism. And the idea is that there's a lot of money being made off of this that's kind of concentrated, and that the benefit would be spread out amongst a lot of people. And so the masses of people they don't have a $1 billion lobby house to go to Washington to advocate for them. And politics are likely to be more responsive to who has the money. So these manufacturers,
the incentive, the industry leader has the incentive to protect his investment and his profit and his business, whereas all the people dispersed throughout the market don't have that same incentive.
Right.
You know, a penny on sugar isn't going to get people stopping feeding their families and their jobs.
Yes.
But $1 million a month or a quarter might have the sugar manufacturer, you know, drop 500,000, you know,
for
20K
sure
to a senator, right? And that's
so these are the pressures that are facing the presidency right now, and hopefully he comes out on the side of the people and doing. But it's going to basically depend on the kind of advice he's getting, and if he's getting a bunch of economists saying, "Hey, this isn't going to have an impact, don't do it," then you know it's questionable whether he will, because honestly, tariffs are really in keeping with the Democratic political base. Like unions, tariffs, you know, that they go hand in hand. That's the contingency, and it's not like free trade is an old Republican idea, right? Now Trump changed that calculus by going to a more populist direction with it, but traditionally tariffs and protectionism go along with the Democratic politics. So asking or looking for Biden to reduce these tariffs is kind of, it goes against the natural grain of what Democratic politics looks like. That's my point. So even though it makes sense economically, the political calculus here is not the best for getting this done.
We'll see. Hopefully, you know, we're in some extenuating circumstances and novel times call for, you know,
well, we do have high inflation.
And you're talking about inflation earlier in the CPI. We'll leave this link below as well, because we'd like to talk about blockchain technology, crypto tools that are, you know, changing the way we share information. It's also changing how we calculate. And there's chain link price oracles that are used to give a more, I guess a more transparent and more logically consistent look at inflation. And like you mentioned before, how CPI numbers are often massaged and changed, which they are. They're regularly changing the weighting, which makes comparing CPI from 1 year or 1 month to another almost impossible or nonsensical. Here, we're seeing price oracles giving back data on these different categories, and you can look at the inflation rate based on those in categories, putting them all together, and it's pretty neat.
Yeah, it's definitely.
You can definitely compare it to the latest local or government metrics that come out on inflation and see the difference. And they're often understating the inflation in traditional markets compared to what you actually see with the housing prices, with food and beverages, utilities.
Right. Yeah, it's definitely it's definitely an innovation and an improvement upon what we get out of the Bureau of Labor and Statistics and their CPI, which is kind of convoluted and really hard to, with all the adjustments, seasonal adjustments and things they do to it. It's kind of crazy, really, to be honest with you. So let's take a look at them on the way out. What's going on with crypto? We always note that the crypto markets and the traditional markets tend to move together. So clearly that there's lots of optimism, and we're still in a bit of a bounce, I would say, since the lows in Bitcoin of around 18,000 not too long ago. And Ethereum's been doing really good today. It was up 10% earlier. Now it's up after the announcement, 14%, almost 15%. I know Shade Protocol has done well today as well. It was up around 17% earlier. So
overall,
crypto markets.
Do you think that this is a long-term run up to new all-time highs, or do you think this is a bounce on the way down to higher rates and more correction?
Yeah, I mean, I have to say, in general, I think the risks of further downside are still significant. Like, I would like to think that we saw the bottom already, but I mean, we still have another 6 to 12 months of rate hikes ahead of us, and I just don't see. I could see individual projects maintaining their value,
Sure.
but as an asset class, no, I can't imagine that we don't have another downward step to go.
That's a good point. And that's why we'll continue to cover the different projects, not just the macroeconomic updates, which are important. That's why we're sharing this, because the markets are heavily correlated. So if you have an idea of where the traditional markets are going, you can kind of have an idea of what's going on with blockchain and crypto. That being said, it's the best time to do your research and to learn about projects isn't in the bull market when everything's green and everything's pumping. It's during the consolidation periods, it's during those corrections where you can find those projects that are still hiring, those projects that are still building applications and building value, that didn't just run away with whatever was earned during the bull market and disappear. And there are a lot of great projects building right now. We will continue to cover some more. We've just got some that just released. So if you want to get the latest and greatest, hit the notification bell, subscribe. You like the macro updates, we drop that too. And we've got playlists to walk you through. If you're brand new, take your time to learn how to download a Web 3.0 crypto wallet. We've got a playlist to start your journey, to talk to you about NFTs with privacy, crypto, blockchain with privacy, and other applications. But yeah, this is definitely a great time to do your research and to learn and get involved, because we'll do a video on this too, but we're talking about this could be really opportunities of a lifetime for those who are taking the time to learn now and understand. We couldn't have imagined being here a few years ago, 2017, 2018. Look at the level of seriousness with which blockchain and crypto is being looked at by institutions, by people working in governments of all levels. We're seeing legislation, laws being passed. We're seeing it being adopted in financial markets and in other areas. So really now it's not, is this technology going to be around? It's more like, how is this technology going to be involved in our lives moving forward? And doing your research, seeing which blockchains, which protocols are developing applications and adding value. This is we'll figure it out together. Who knows? There's applications that don't even exist yet, blockchains that probably have yet to be made that can end up serving and becoming huge. But in the interim, there are some pioneers and there are some amazing developers and builders, and there's already some incredible applications that are already accessible, able to use and to share. So you know what to
We'll
do.
be up on it for sure. So like, subscribe, keep the conversation going with us, and we'll catch you on the next one.
Till the next time, have a beautiful day and namaste, y'all.